AMD's been on a massive tear lately, and in their most recent quarterly report, we saw operating incomes up 274% year over year, with net income up 243% year over year, along with earnings per share up a healthy 221% year over year. All the while, the stock price has continued to flounder around in mediocrity, as you can see here on the 1-year chart, bouncing a few times off a support line around 73 or 74 bucks. We've hit highs nearing 100 bucks a few times in recent months, but it seems the last couple of months, the stock is just getting no love, dude. In this video, I'm going to break down why I think AMD could be set for at least a 25% gain in relatively short order. This video will primarily focus on some of the financial health, as well as some analyses to understand the potential of AMD as an investment. If you want to learn more about what's going on with the company, check out my overview video linked up here that I'm releasing at the same time as this video. I'll also put a link down in the description. Step 1, let's take a look at the earnings and balance sheet. As we're seeing AMD's growth situation changing rapidly, we're also seeing revenues, gross profits, operating incomes, net incomes, and EPS all booming. In the intro video to AMD, we looked at the most recent quarters of the balance sheet, but here, let's look at the last 4 years, before we even take into consideration the blowout that was the first quarter. Generally speaking, just so you know, I'm looking to get into companies like especially undervalued companies for at least half a year, if not, 2, 3, 4, 5 years. So I'm not the kind of guy who's trying to scalp 3% off a little chart read or anything like that. The multi-year balance sheet tells the same story we've been seeing on the quarterly balance sheets. Check it out here, cash and cash equivalents, along with all the other assets basically growing steadily. For a market cap of about 100 billion, seeing growth this rapid is really impressive. PPE and long-term investments show a similarly steady climb, and thankfully, goodwill is just staying put. One of the annoying things some companies will play around with on their balance sheets is artificially boosting their goodwill just to make assets look better or look bigger than they are. It'd be something like, hey, we're at McDonald's and we sell the Big Mac and we have the golden arches and those are worth $100 million kind of thing. And you can't really put a price tag on that, but they'll just throw stuff like that into goodwill. And I'm not saying McDonald's actually does that. Maybe they do. I don't know. But companies will play around with crap like that, but AMD is just not doing it, which is good to see. Here are the liabilities over the same period, where we see AMD and CEO Lisa Su's consistent conservative policies in action over the years. Current liabilities are growing way slower than the current assets, as you can see, and so are the total liabilities over the years. As a result, shareholder equity is seeing some juicy growth over the years, as you can see here too. Just yesterday, they did announce a $4 billion stock buyback for the first time ever in AMD's history. This seems to have given the stock a bit of vitality, and we're starting to see, a little bit of a climb. It's climbing more assertively than it has kind of in the last few months, or weeks at least. Share buybacks can be a sign of a lot of things, but in this case, it's probably a signal that AMD believes their stock was worth more than 74 or 75 bucks, kind of where it's floating around for the last few days. One way to think of it is kind of like as a simple straight up investment, like how you or I would look at stocks. AMD's management is looking at all the different available options, and they're saying, how can we grow our money? They found AMD as an option, and they're like, AMD is undervalued. Of course, they have more knowledge than we do about these things. So they plan to buy some over an unspecified period. This has the multiplicative effect of lowering the number of outstanding shares available in the market, and therefore making each available share more valuable or more heavy, while at the same time showing the world that AMD's management is really confident for what's on the horizon. If they were just kind of oh, we have no more tricks up our sleeves, they wouldn't be investing in themselves like that. And so, when the stock goes up, hopefully more people get excited about it and they start buying too. And then that, causes the stock price to go up even more. So good news on that front for investors. CEO Dr. Lisa Su thanked the growing cash generation for the ability to provide greater shareholder return. One thought a lot of people have when it comes to buybacks versus dividends, for example, is if AMD just offered a dividend with that free cash, wouldn't it provide a more direct means of providing growth for the shareholders? And in some cases, yes, that can be true. But in a lot of cases, considering that the stock is undervalued and poised for large growth moving forward, and the potential tax implications of a dividend, Making a move like this funded by growing cash generation ends up being more helpful both for AMD and for the shareholder. This $4 billion buyback should end up taking about 51 million of the 1.2 billion shares off the market, or just over 4%. Interestingly, despite competitor Intel's much larger resources, even while they're losing market share big time to AMD, a closer look at the offerings in the pipeline for the coming years suggests that, in my opinion, AMD is still the superior choice for my investment dollar at the moment. For a deeper look at how AMD, Intel, and NVIDIA stack up as investment opportunities, please check out the video linked up here and down in the description that I will release shortly. Next, I wanted to take a look at the income statements, the annual income statements, not the quarterly ones, where we see a similar story playing out. This doesn't take into account this year's first quarter, which was like freaking amazing, but we're still seeing the steady growth story unfolding. Gross profits growing nicely and outpacing R&D and SG&A outflows too, leading to growing operating incomes. They did hit up a massive $1.3 billion tax benefit upon the release of a portion of the valuation allowance on deferred tax assets last year in 2020, which still has some remaining available for this year, if my understanding is correct. But even if you ignore the tax benefit, the net income down here at the bottom is still blossoming beautifully. I should also mention that after this year's first quarter results, they confidently raised their revenue growth expectations from 35% to about 50% year over year, as you can see in this slide here. Below that, they mentioned that they're expecting to keep a similar gross margin percentage and effective tax rate too. I did also want to mention briefly the Xilinx acquisition on the horizon. I go into much more detail on the acquisition on the video up here and linked down in the description if you want to learn more, but it'll be an all-stock deal and it will be accretive, so you should only expect to see rising top and bottom lines while costing no cash at the same time. The deal, should it go through, will raise AMD's market cap roughly 30% while boosting their TAM and potential future opportunities in other market segments like 5G and stuff like that too. Third, let's take a look at some analysis of the numbers. You guys know I'm the Canadian-American serial entrepreneur living here in Japan, and frankly speaking, I'm not the kind of investor that will just like go all in based on a sexy looking discounted cash flow analysis. Though DCFs can be helpful to get a quick understanding of some of the potential of a stock going forward, there are a lot of assumptions that go into them. Based on your assumptions, the numbers can swing viciously. Though AMD is forecasting 50% revenue growth this year, I've used a 5% perpetual growth rate for my absurd long-term growth projection, along with a working average cost of capital just below 12%, and based on last quarter's home run, a free forward cash flow of 119%. This gives us an intrinsic share price of 144 bucks, giving us a potential upside of about 92%. Though I felt this number was absurd based on those assumptions, it's not actually that rare to see professional analysts who do this full time, who've given even higher numbers like 150, 160 bucks per share. My moderate growth case numbers worked out to a share price of about 115, or potential upside of like 50, 53%. And with even more modest numbers, it ended up at 85 bucks, which is still, 10, 13% from where we are right now, depending on when this video is released, of course. These assume a 3.5% perpetual growth rate, which AMD is absolutely like crushing right now. So take all of this with a grain of salt based on these assumptions again. In my own, feels good considering everything else going on number, I felt confident with a price target of about 100 bucks for the coming quarters, but it really wouldn't surprise me if we see it going up to like 120 in like a slightly longer term point of view. That's like a 30% upside. I have been sharing on my Patreon my moves as I do them, and I've been talking about AMD for the last couple of weeks as I'm studying it too. If you want to learn more about what I'm looking at or support what we're doing on this channel, I want to put out more content too, please come on over and check out our Patreon link down in the description. Looking forward to hearing your thoughts about these price targets, and remember to stay generous, guys. Love you and talk to you in the comment section.